Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, May 3rd, 2023. It's now 5:40 a.m. Central Time. We start off in the S&P 500 weekly chart in DeMark as DeMark is having huge problems with their interface. So I'll zoom into the current area now. And one of the issues is that sequential buy countdowns are missing on the charts. So we'll focus on the propulsion 50% and 100 disqualified, momentum up remains disqualified. As for this week on Monday, the open here was lower than the close for the end of the week of the 23rd, and that ended that qualification of that propulsion momentum up level there. The weekly chart has printed the combo and sequential sell setup 7 count, and to negate that for end of week this week, there must be a close below 4105.02 for the price flip to the buy setup count 1. So that's getting long in the tooth there, as it's getting very close to the sell setup 9 end count. The NDXT, Big Fat Cap Balance Sheet Extraordinaire Mega Tech Index. We'll zoom into the current area now. The NDXT has printed the 3 white soldiers candle pattern. You can see it in the thumbnail here. First day was a white candle. Second day opened within the body of the first candle, ticked higher. And the last and third candle, same thing, opened up within the body of the previous candle and then ticked up. And these candle patterns and measure rules don't work all that great for indexes at that level, and they're more suited for individual equities, but nonetheless we measured it, and the measure rule brings the up level to the target level of 6783.59, and that's just a target level for trading if you actually bought the ETF for this and the index got up to here, you would jettison your buy for a short-term trade. It could go higher, but this is really actually a bad performer over 10 days, 5 to 10 days. It doesn't make it up much further before rolling over to the downside. The NDXHILO chart shows the 5 EMA in blue continuing to move further down below the 10 EMA in red, and the NDXHILO dotted line here is still headed down and shows no indication of rolling around to the upside. Rock 12 is still hanging around the plus or minus 5 from 0 area down here. So there could be a reversal and head back up. These are confusing times here for sure. And the NDXHILO long-term KST is just headed straight up like a rocket shot. And the short-term KST is actually rolling over a little more. It's still above 0 at 2.90, but getting closer to its signal line at negative 12.25. The intermediate term KST is really headed down. And the NASDAQ Composite High-Low Index, NAHILO here, shows it is still continuing its downward move. The blue below the red below the yellow. However, the index NAHILO dotted line is headed up a little bit whereas the big tech NDXHILO is still headed down, so that could be telling us something there. And the New York high-low is looking the same too. It's not under its 21 EMA signal line yet, but the blue 5 EMA is below the 10 EMA, and the NYHILO dotted line here is headed up like the NASDAQ composite. So that's telling us that there's a bit of a rotation out of the big fat cap megatechs into the left behinds. The CBOE total put call ratio charts KST is showing indications of being opposite of what the S&P 500 is doing lately, and that's a reflection of the zero-day options being sanctioned by the CBOE. So they're going to create an index for 0 day now, I think. And that's really throwing the monkey wrench into the regular VIX, which throws a monkey wrench into this put-call ratio here. It started right around here when the S&P 500 price went down, and the KST for the put-call ratio went down also. And now you can see there was a tick up in the KST and a tick up in the S&P price. So that relationship is broken again, but nonetheless it is still headed down, meaning the KST here. So it's getting towards some of these valleys, one here and one here, and there's a lower valley here. So maybe only getting down to some of these valleys, maybe this one, which is about where it's at right now before heading up. But again, we'll have to watch price action and see what that does in relationship to the KST. So for now, this is broken. The S&P 500 support and resistance levels big board chart shows the gray areas at the top of the range, S1, and the pivot point. And price in the pre-market hours for the S&P 500 on the 2nd at 6:40 a.m. Central Time is 41.61. So to the immediate upside is the uptrend line from 06/16/2022 at 41.90 and R1. And above that is the 4200 zone, and there's some low levels there, the upper Stark band and the daily high channel 3. And take notice that the weekly and the daily are quite close together now. So that's formidable resistance there, along with the Stark band. And in that vicinity too is the weekly 2018 broadening top in dashed red. And here's the next range here, these two around 42.37 down to 42.28. Basically, this is where the Fed made their first mistake back in 2021 by not tightening things at least a little bit. So that's another Fed zone here that they're going to pay attention to when price starts getting up there. And it already is. And to the immediate downside is S2 here. And then it takes a significant jump down to the 20 simple moving average, the daily conversion line, and the 21 EMA moving average. And here's an interesting situation for the S&P 500. We're on D wave, up wave 4, and that will print at 40.49 approximately. And the 61.8 Fibonacci retracement level to the downside brings it right to this weekly diamond bottom extension perfect uptrend channel, the bottom line of that. And before the D wave up wave 3 printed, the projection for the D wave up wave 2 made it down to the 31.8 Fibonacci retracement level versus the 61.8 Fibonacci retracement level. So that's considered a shallow retracement. So now D wave up 4 has to make up for that by going down to the 61.8 Fibonacci retracement level. So what I'm getting at here is that the retracement level is higher than where the D wave up wave 4 will print. And this is still the next level to the downside that has good support if it breaks this 21 EMA. The S&P 500 daily AD line and the NASDAQ 100 daily AD line are still above their 21 EMA signal lines respectively. And the ROC 1 has simmered down and is right on top of its zero line, smack in the middle of the green zone. So volatility is non-existent for now. And the ATR2 is right around its middle green zone here, so volatility is just waiting to see what happens. And I don't understand why anybody is waiting now. I mean, what are traders and investors waiting for the Fed meeting for? No matter what happens, this market is going to skyrocket. I could be exaggerating, but it doesn't seem like the Fed means anything to the market participants. So I just don't know what they're waiting for. And any dip down is a buying opportunity. So if there is a decent downdraft, when they raise the rate another quarter basis point, everybody's expecting it. And if there's a downdraft, I would buy into it. And the New York traditional McClellan breath oscillator to get back to zero would require 110 advancers over decliners to get back to zero. So that went back under the zero line for the McClellan breath oscillator traditional version. Yesterday it was above it, now it's below it. So there's a bit of porpoising going on there around the zero line. Have a great day.